This program is brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness. With the people, products, and technology to take you there, it's why they say at PennyMac, greatness lives here.
Welcome to The Interest. I'm Mike Savino. The recent surge in mortgage rates has sapped any remaining energy out of the housing market. Redfin says that touring activity and new listings both continue to fall, and that's obviously driving down origination. Rate locks in August were down 57%, and according to Black Knight, mortgage lending is now down to a 4-year low. The head of Black Knight's Optimal Blue division notes that the drop in rate locks comes despite prices coming back down. The drop is the result of rates rising again. The average for a 30-year fixed was at 5.89% last week, and this continues to have profound effects on home affordability, which returned to near 35-year lows to close out the month. We saw drops in rate locks for rate and term refis, cash outs, and purchases. And the drop in purchase locks is particularly bad news as we leave the summer season, which is traditionally the busiest time of year. Purchase locks in August were down 16% when compared to 2019. That's the second straight month that purchase locks were below pre-pandemic levels. In other news, mortgage fraud fell 7.5% in the second quarter when compared to last year. Now, prior to this dip, fraud had been on an upward trajectory, starting with the first quarter of 2021. Now, CoreLogic says the slide is partially because it recalibrated how it scores fraud. The company did not elaborate on what changes they will be making, but it does think that this recalibration will lead to more fraud appearing in its data going forward. The report did find increases in certain types of fraudulent activity on mortgage applications over the last year, including income fraud, property fraud, and identity fraud. Now, CoreLogic says in its report that this trend is perhaps not surprising, considering that purchase loans now account for more mortgage transactions than refinances, and that the former is more susceptible to fraud activity. The states with the largest fraud risk increases were Rhode Island, South Dakota, Kentucky, New York, and Nebraska. We'll have more top headlines right after this.
Don't miss the largest regional mortgage show in the nation. The New England Mortgage Expo returns to Mohegan Sun in Connecticut, January 12th and 13th. See us at www.nemortgageexpo.com. Start your year with the best connections in the industry. Dozens of sessions, scores of exhibitors. It's where success is written every hour. www.nemortgageexpo.com.
Welcome back. With home prices skyrocketing earlier this year, homeowners saw a huge boost in equity in the second quarter. Homeowners with mortgages, roughly 2/3 of all properties, saw equity grow by nearly 28% compared to the same period in 2021. That represents a gain of $3.6 trillion in equity over the last year, or about $60,200 per borrower. But we are seeing signs of trouble for a small group of homeowners. According to CoreLogic, a 5% drop in home prices could mean 148,000 homes having negative equity, or having a remaining balance that is more than the value of their home. Last week, we reported that Black Knight found tappable equity started to fall in July, right at the start of the third quarter. We'll be back after a word from our sponsor.
This program was brought to you by PennyMac TPO. Visit tpo.pennymac.com to learn more about becoming a partner and starting your journey to greatness.
For more on these and all of today's top stories, go to mortgagenewsnetwork.com.